The most requested stock on the channel by far has been MPW. A lot of you have asked me about an update on the stock. I was bearish on it for a long time, but very recently I changed my mind and I did say that MPW is presenting a great buying opportunity, and I still share the same opinion. That's why I'm doing this video. They reported earnings. I'm gonna give you a very quick update on MPW, on the debt maturities, on what's new with the company, on the dividend, if it's safe or not, and on the stock in general, if it's presenting what I would call a generational buying opportunity, or is it just another piece of junk, value trap that's gonna keep going down forever. It's very possible. Now, for MPW, if not familiar with the company, they own 402 properties, mainly hospitals, medical, healthcare kind of properties, in over 9 countries: US, South America, Switzerland, Europe, and in many different places. And they have a very good business model, to be honest. In terms of their lease maturities, 88.8% of them, they don't expire until after 2033. So they have very long-term maturities, and it sounds like a solid business model. Healthcare REITs, they own hospitals, they have long maturities. Like, what could go wrong? Why is the stock such a disaster? Well, that was mainly due to one tenant, and this one tenant was very bad. There was a lot of shady stuff going on, and that's Steward Health. A lot of you maybe heard of this tenant, Steward Health, and they very recently, as of May 7th, they filed Chapter 11 bankruptcies. They were not paying MPW back. They were borrowing money. The CEO was buying yachts with the money, and it's just a whole scam. Like, the whole thing was a scam, very shady stuff. But it's behind them now, and it's starting to look better, and MPW is turning a new page. And that's why I started getting a little bit bullish on the stock, because this is how you have certain change in sentiments when the worst couldn't get any worse. And this is what I believe has happened with MPW. The worst, like, it just can't get any worse than that. But the stock isn't going up too much, it's still staying flat, and it's trading based on the 10-year because they have a lot of that. So if the 10-year yield is going up, MPW struggles. If the 10-year yield is going down, MPW puts in a little bit more strength. But they did a very good job in terms of managing the aftermath of Steward Health. As you can see from this chart, you don't see Steward Health anymore on this one, and this is 100% of the rents. They were able to sell some of the assets and lease some other assets. For example, very recently, they leased 2 assets in Arizona for $140 million. Then they sold 18 idle facilities for $246 million. Then they used it to pay down the debt. Then they, for example, did another one where they leased it for, or they actually sold it for $200 million. And this company will assume some of the liabilities, which is around, I believe, 400 or 500 million worth of loans. The company is going to assume them, and net MPT will get 200 million. Another very smart move. And in total, they leased a lot of them, over 17 facilities. They were able to lease them, and they're going to start collecting rents, partial rent payments, in the first quarter of 2025. And this is the bad part about it, is that I couldn't really understand it because it was very complicated among different tenants. But I don't believe we're going to start seeing the full effect until like early to mid 2026 or late 2025. This is what they said in the last income statement or earnings report. And this one, they said they expect some payments in the first quarter. So we're going to likely see a potential uptick in funds from operations. Now, looking at the dividend hasn't been the best in terms of dividend investors, from 29 cents to 8 cents. But I believe the dividend is bottoming out in the short term. They just made an announcement around November 21st, a few days ago, and they kept it at 8 cents, so no cut so far. And I don't believe the 8 cents dividend will be cut anytime soon, because as of the last quarter, they did make around 16 cents of funds from operations per share, and the dividend is 8 cents. So this is a 50% payout ratio. They pay 50% dividends, then the other 50%, they use it to pay down the debt. This is a very good balance, and the dividend is well covered. So I don't believe the 8 cents dividend, which is around 7.8% dividend yield, I don't believe it will be increased, but I also don't believe it will be cut anytime soon. Maybe in the future, if they do more asset sales and FFO goes down, although the new leases will likely offset the decline of potential asset sales. So I believe, 8 cents or around 8% dividend, it's safe for the next maybe 6 months to a year. It's a very unpredictable stock, but it's safe. Now, the biggest problem of all with MPW is the debt. They have so much debt. It's absolutely crazy. They were able to get rid of a lot of it by doing asset sales. They have very valuable assets. They sold, I believe, year to date around $2.1 billion worth of assets, and they were able to pay back a lot of that. And that's why I said I'm liking MPW, because I'm starting to see it do the right things. They're not paying 100% in dividends. They're cutting the dividends. They're being disciplined, cutting costs, selling assets, very, very valuable assets, and they're paying down the debt. And it's very possible it could succeed. I have another stock, I used to own called GEO. As you could see on this chart, it's up 300% since I talked about it. And I used to own it at $7.10, but I was a little bit dumb and I sold it early. That's my mistake. I sold it, I believe, around $13 or $13.50, and I bought something else with the money. But it was the same setup. It used to be a REIT. They made it a C Corp. They cut the dividend, and then they just sold assets and paid down the debt. And if MPW, in my opinion, if they can pay down 2025, 2026 and 2027, they have a very good chance of potentially getting a credit rating upgrade, and then they will be able to refinance the rest of 8 and 900 and 400,000. They will be able to likely push them off over the next 10 years, 15 years, and then MPW will be able to potentially do buybacks or even increase the dividend, which would be amazing for long-term investors. So I believe MPW can pull it off, even though the debt is very high and it's very, very risky, but they do have a lot of valuable assets. And now the company is trading at 48 cents on the dollar. 48 cents on the dollar, which is around 0.48 time price to tangible book value per share. And as of my calculation, as of the last quarter, tangible book value per share is around $9.07. So if MPW just gets back to the regular, tangible book value per share, which $9.07 would be 110% on the upside. And normally those companies, they trade a little bit above tangible books. So they trade 1.2, 1.5 tangible book. In this case, could be 140, 150% on the upside. And it could happen in a very short period of time. And this is the biggest problem with MPW, is it's going to take some time. This is what I believe. It's going to take some time for the leases to show off on the income statement, not before late 2025 to early 2026. They're going to have to do a lot of asset sales to pay down the debt and then try to refinance the remaining of the debt and show some discipline. They've been showing a lot of discipline. And that's how normally you get some kind of a credit upgrade. And that could help them very, very much, especially if interest rates come down 2-3 years from now. It's going to be extremely, extremely helpful for the company. But I would say MPW will likely, struggle a little bit until early 2026. But the best part is that the 8% dividend is safe for now. So you're getting paid an 8% dividend to wait for MPW to pay the debt and refinance and do whatever it has to do. It's very risky. It could go to zero. I mean, maybe not. Maybe it's not going to zero. But I just want to try to highlight the risks. That it's an extremely risky proposition. But they do have some valuable assets. And many people succeeded in the past by selling the bad assets and paying the debt and just starting all over. And I believe MPW could do it just like Geo did it, just like CoreCivic did it, just like many of those companies did. So that's why I still like MPW over here. It's not for everyone. You need to have a risk tolerance, high risk tolerance, and being able to take some volatility. But I like MPW. The 8% dividend, in my opinion, is safe for now. They're on the right track, doing the right things. If they have lower interest rates and they keep doing the asset sales, they have a very good chance of refinancing, and then everything will be fine for MPW. And there's a lot of upside with the stock, 2 to 3x over the next 2 to 3 years. So this is all I have to say about MPW. Not financial advice, just my opinion. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.